Ritu Singh. These are the top headlines from the startup space. Home appliances startup Atomberg signs a 3-year deal with the BCCI as one of the official partners for domestic and international cricket season over 2024 to 2026 period. The partnership will begin with the upcoming 3-match T20 series against Afghanistan starting January 11.
BlueSmart introduces a new pricing structure which will include surge pricing effective January 8th. The new structure has 2 time slots, rush hour and relaxed hour. Rush hours is further split into 2 for city rides and airport rides.
Health and fitness startup Fitter bags 28 crore rupees from Zerodha's investment arm Rain Matter in a Series A extension round. The funds will be used to enhance technology, expand service and fuel global expansion plans.
B2B custom manufacturing platform Karkhana raises $6.3 million in a Series A round led by Arkham Ventures and Susquehanna Asia Ventures. Existing investor Vertex Ventures Southeast Asia and India also participated.
Credit on UPI platform Salary Say raises $5.25 million to make financial management more accessible for salaried professionals.
Swiggy Instamart VP Siddharth Satpathy quits, the latest in a string of executives which have exited the IPO-bound company in the last 1 year, including Karthik Gurumurthy, who built and headed Instamart, and former Chief Technology Officer Dale Vaz.
We're just getting started in India, says Starbucks Global CEO Lakshman Narasimha. Hopes to launch a store every 3 days, says that Starbucks will source more via the joint venture with Tata Coffee with the target of taking India to the world.
Department of Industrial Policy and Promotion bats for lowering GST on hybrid cars. Sources say the Heavy Industries Ministry has been asked to bridge the gap with electric cars, which attract 5% GST. The cess and GST on hybrid cars currently stands at 43%.
Google is set to go before a federal jury in Boston trial over accusations that processors it uses to power AI technology in key products infringe a computer scientist's patents. Well, those were the headlines we've been tracking for you this evening. Custom manufacturing platform Karkhana.io that drives digital transformation for India's manufacturing MSMEs has raised $6.3 million in its Series A funding round led by Arkham Ventures and Susquehanna Asia Venture Capital. The round also saw participation from existing investor Vertex Ventures, Southeast Asia and India. To tell us how Karkhana.io plans to redefine the landscape of the Indian manufacturing industry, joining me now is its founder and CEO, Sonam Motwani. Sonam, welcome to Startup Street. Karkhana.io provides sourcing and contract manufacturing solutions to OEMs and tech companies through its manufacturing MSMEs network in India. If you could elaborate on your business model, how do you help OEMs with a custom range of manufacturing solutions? What are your offerings?
Firstly, thanks, Shruti, for having me here. To tell you more about what we are building at Karkhana.io. So what we have created is a custom manufacturing platform where we engage with OEMs across different product categories, across industries, and help them set up the I'd say their manufacturing supply chain, right from components all the way to complete assemblies. And we do that by aggregating capacities of multiple MSME suppliers across India, across mechanical components, across electronics, and integration of mechanical and electronics. And currently, we have about 500 suppliers on our platform. And using their capacity, we are serving about 100 OEMs across India.
Okay.
And this is across categories like electric vehicles, like medical equipment, consumer electronics, and aerospace, as well as drones.
Okay, let's talk about the fundraise now. Sonam, you plan to use the fresh funds to fuel expansion of your supplier base, establish a robust electronic supply chain, and drive expansion in the US and Europe. If you could elaborate on each of these plans and also tell us your growth targets.
So Shruti, for the last year and a half, we have seen a very strong traction on our offering of contract manufacturing, where we take up the complete product requirement from a customer and then figure out suppliers for each and every component and then bring all the components together to deliver a completely assembled product. And today, most of the new age products are, more than 50% comprised of electronics.
Yes.
So with this understanding, electronics is a very important part of our supply strategy. And with this new funding round, what we aim to do is strengthen our supply chain in India for electronics and electronics assembly suppliers.
Okay.
And we would double down on our internal resources, our internal knowledge base to learn more about electronics, as well as augment the existing supply chain in India so that we can have a much stronger offering for the OEMs that we serve. Also, so far, most of our business has been from companies in India, but with more global demand arising out of the need for alternate supply chains, in where India is very strongly positioned, given its
Yes.
strong skilled labor force and cheaper cost of manufacturing. We are seeing a lot of demand on the sectors that we focus on from countries like the US and Europe.
Okay.
So we are also working on capitalizing on that and setting up our teams to understand these geographies better and also customize our offering for companies in these countries and serve from India.
All right, Sonam, if you could quickly take us to the current business growth numbers, what is the top line looking like and what is the revenue model? How are you making money?
So today we do about 10 to 12 CR of revenue on a monthly basis. And this is growing more than 20% month on month. And in terms of what fuels our growth, Shruti, here is that from the start, we have had a very strong focus on being resource efficient and building technology wherever possible to extract most out of having a very smart team on ground, but also aiding them with right kind of tools, which extend to all our supplier base as well. So that we don't build an extremely people-heavy team, whereas use technology wherever possible to scale our operations. And this has been the core of how we have built Karkhana.io so far. So basically, going ahead, what we see is that given India has such a huge network of MSME manufacturers, we are building technology that is extremely accessible to the MSMEs so that we tie all of these fragments together, we tie all of their capability together and create a model which makes this fragmented ecosystem very accessible for the OEMs, not just in India, but globally.
Okay. So now one final question, if you could answer that quickly. The pandemic highlighted the vulnerability of global supply chains and the need for diversification. And while there is a surge in domestic and global demand from OEMs, most small suppliers are poorly equipped to tap into newer order flows, to market their capabilities and find ways to maximize their capacity utilization. So how are you helping them navigate these challenges? Before we let you go, if you could quickly share one use case with us.
Sure. So let me take an example. Today, as I spoke about that, most of the products that we build comprise of electronics majorly, and then, say 60% electronics and 40% mechanical components. If we see the Indian manufacturing landscape, most of the suppliers are equipped with one capability. Most of them would not have the capability to build a complete product. So through our platform, what we do is we provide demand which is matched to the capability of a certain supplier to them, which means we put in a lot of effort on our platform to collect relevant information on every supplier, on their capability, on their experience, and what are the areas where they have the ability to scale with their installed capacity, and find them demand matched to their capability, and then use our tech to tie together multiple such suppliers to build a complete product. So let suppliers play to their strength and bringing our technology and our intelligence to tie all of that together and give a complete product solution to the OEMs.
Okay, Sonam, keep empowering India's manufacturing MSMEs. And many thanks for joining us on Startup Street today, and wish you the very best for all your growth plans.
Thank you. Thank you, Shruti.
Okay, moving on, payment gateway and services provider Cashfree Payments has posted a 75% rise in revenues from operations to 614 crore rupees, even as its losses rose sharply to 133 crores in FY23 from 3 crores in the year before. Its expenses also more than doubled during the year to 750 crore rupees. It also received, remember, the payment aggregator license from RBI, and the impact of the embargo on customer onboarding that was in place for nearly a year will probably reflect in the FY24 numbers. So to discuss all of those, joining me now is Akash Sinha, the co-founder and CEO of Cashfree. Akash, welcome to CNBC-TV18. Thank you very much for your time here. Steep rise in revenues for FY23 for you. Give us a breakup to begin with of how much came from your core business of payments, how much from your other business like, Forex and others, and overall, how much did you have to spend per unit for each rupee that you earned in FY23?
First of all, thank you very much for having on this show. See, I think FY23, we grew phenomenally. I think it was just unfortunate that we had to go through embargo by end of the year. But by then, I think the idea was to how do we scale existing product? How do we continue to get more and more market share? And at the same time, how do we invest into new products which can create revenues for the future? So this is what we did essentially FY23. Right? We saw a lot of growth in the core product, especially in the payments product. But we also doubled down into our ability to continue innovating for the future. Right? If you see overall headcount at Cashfree grew from somewhere around 350 that we ended financial year 20, and we added more than 350 to 400 people in the period of financial year 23. The idea was how do we end up building a superior technology which can, meet the demand of technology demand. We can meet the payments demand, which is being created in markets like India. Right? India is poised to hit $5 trillion economy very soon. At the same time, we expect digital transaction volume to where we are today. Right? And to be ready for that, we wanted to invest in technology, invest in product. And that is where a lot of investments have gone in. Plus, we were able to launch new products in the period of last 12 months. Right? We launched things on connected banking, digital lending guidelines. I think there are a lot of guidelines where we had to be ready for it. Then we launched verification suite, which also scaled up very well. Recently, we launched Flowwise, which is India's first.
Akash. RBI's ban on onboarding new customers for you, that lasted almost a year until you got the final license. To what extent is it going to impact the FY24 numbers? Any early estimates you could give us?
I think we just have 3 more months left for this year. But overall, I think compared to financial 23, we are going to see overall growth on the revenue for the company, right? We are not going to see a dip because of, one, we have been able to, increase the wallet share of a lot of existing customers. And second, we have also been able to cross-sell to an existing client base, right? Starting with this financial year, Cashfree had more than 3.5 lakh merchants on the platform. So, a bunch of them are in dormant state, bunch of them were not transacting, or sharing their full business, to us. So we have been able to.
So no estimates yet. No estimates yet. Sure. Your losses have also risen quite sharply during the year.
I'm sorry, what?
Yeah, your losses have also risen quite sharply to 133 crores from 3 crores that you saw the year before. What is the reason for this? Because you were profitable, in the few years before that. Has that ban hurt the company a lot? And does that mean FY24 will also be a year when you continue to report losses?
See, I just explained, right? I think before financial 23, we had 350 people on the company, right? End of financial 23, we had more than 750 people. So we added a lot of people in the company for the sake of, investing into the product technology, investing in the process, and be more mature to, meet the demands which are coming out in the future, right? We also invested in a lot of products which are still in a very infant stage, but they're going to start giving us in the reward and revenue in this year and the upcoming year. So a lot of these are largely investment, not the expenses, right? You're going to see the results of those investment in this financial year and also the next.
Okay, let's also talk about the payment aggregator license then, because, how many merchants do you have in the pipeline that you can now onboard, and what sort of fillip is this going to give to your business in the near term?
I think in the last 20 days itself, we onboarded more than 23,000 accounts, right, which have been pending for us for the last 10 to 12 months. So a lot of merchants had done KYC in the platform, they've done the agreement, they did the integration, but they were simply waiting for us to switch on the tap. Right. I think we got the final license around 15th of December, and in the last 20 days, the team has been able to onboard more than 23,000 accounts on the platform already. So it's a great, exciting time for us, right? I mean, a lot of merchants were unable to use the platform, which they're able to do now. And we're also doing accelerated onboarding for a lot of these start as a new merchant, which can come to Cashfree, get live within 24 hours, and start ramping up the business on the platform.
Okay, so, what would that mean in terms of volume growth for you, in this coming year? And would that also mean that you need to raise more capital? Because your last funding round was in June of 2021.
True. I think to answer the first question, we are expecting to triple our monthly volume in the next 12-month period. That is where we are heading toward. Right? The reason is the market is also, becoming bigger day by day. And second, we had a lot of pent-up demand, right? Where people wanted to use Cashfree, they couldn't, but now a lot of them are coming back. So we'll likely see around 2.5 to 3x growth in the total volume we are going to process. To answer the second question, I think we are going to see a lot of like new merchants coming on the platform, right? At the same time, revenues are going to shoot up proportional to the volume we are going to see growth on the platform.
Okay, so no commitment on whether you're in the market to raise funds or not. But Akash, we've run out of time. Thank you very much, for being here on Startup Street. Yes, go ahead.
No, sorry. I think, as I said, right, I think the company has been able to generate revenue in the past, right? We also raised funding from State Bank of India, its partners. So now we are pretty self-sustainable. I think we don't need, no money right now, but as we grow further, as we plan to grow in more geographies, right, which is always on the roadmap, then we may, decide to hit the market.
Okay, Akash, we'll leave it at that. Thanks very much again for your time here on CNBC-TV18.
Thank you very much.
Well, with that, it's time for us to head into a short break. On the other side, Velocity announces a 300 crore rupee capital fund to empower SaaS businesses. What is the investment mantra and which sectors are they betting on? We understand from founder and CEO Abhiroop Medekar right after this short break. Stay tuned. Welcome back to Startup Street. Data-driven financial solution provider Velocity has announced a 300 crore rupee growth capital fund dedicated to empowering the next wave of B2B SaaS businesses. The Indian SaaS industry is on an impressive growth trajectory, expected to reach around $26 billion in revenue by 2026, and Velocity's fund plans to offer customized financial solutions to meet the dynamic requirements of these businesses. To elaborate on the road ahead, joining me now is Abhiroop Medekar, the founder and CEO of Velocity. Abhiroop, welcome back to Startup Street. In 2023, Velocity disbursed over 400 crore rupees, a sum greater than the total disbursements over the last 3 years combined to high-growth D2C brands and e-commerce businesses. You now look to invest in B2B SaaS startups. What makes you bet big on SaaS, and how much of the 300 crore rupee fund do you plan to invest this year?
Thanks a lot for having me, Shruti. Excited to be here again. Big fan of the show. We started Velocity 3 years back to fund new age companies, and we felt that they need better financing products. We had been focused on e-commerce and D2C for a good part of the last few years. But SaaS is a very interesting segment for us, primarily because they have very stable and recurring revenues. And that is a stream that we can understand and fund them against. At the same time, these are software businesses. So these are not businesses which have hard collateral available that they can give as a collateral to a bank and get funds against that. So it's a big gap that they face when it comes to their growth capital needs. And we are well positioned to fund that because we understand their cash flows. And we have built a fully digital process through which they can raise up to 5 crores within 5 days. That's the proposition that we have built for them. To answer your next question, we plan to deploy this fund over the course of the next 12 to 18 months. We already have a strong deal flow, but we are looking at an 18-month window over which we will be deploying these funds.
Okay. Abhiroop, I believe you've already made some investments with this new fund. If you could elaborate on those, and how many startups do you plan to invest in? What is the ticket size of the investments going to be?
Sure. So the ticket sizes will range from 50 lakh rupees at the lower end to 5 crore rupees at the upper end. That's the range that we'll invest in. This is a dedicated fund for SaaS businesses only. And we have already made 4 investments, you're right. The kind of companies that we are finding exciting right now are companies which are being built in India, but which are selling software globally, right? We see a big wave of companies like this, which are being built in India, but which have global customers. And they need capital for their go-to-market spends. They need capital for sales and marketing. And we are well positioned to fund that use case very scalably. And then keep on supporting their entire scale-up plan.
All right, let's now talk about Velocity's offering of a fixed-term credit product, which is specifically designed to provide SaaS businesses with financing proportional to 3 to 6 times the amount of their monthly recurring revenue. If you could elaborate on this innovative approach where it allows companies to receive growth capital without the need to dilute their equity.
Absolutely. So I was an equity investor earlier, and I felt that equity investments just do not scale. There would be 100 good businesses out there, but equity investors will typically end up funding only 1-2% of them, right? So the proposition that we have built is that, as an example, if it's a SaaS company which is doing $100,000 of monthly recurring revenue, they can raise anywhere between $300,000 to $600,000 from us through a fully digital process. They don't really have to create any pitch decks. They don't really have to create any projections. In fact, we will plug into data sources that they already have, which includes their accounting softwares, their payment gateways, etc. And we will enable that kind of financing for them very, very quickly. They can use that capital for funding their growth, primarily across sales and marketing. And then they pay us back flexibly over the course of the next 12 to 18 months. That's a typical tenure that we offer for these products.
All right, let's delve deeper into your expanded financing suite that now encompasses fixed-term credit, which we just discussed. It also includes revenue-based financing, revenue-based overdrafts, and credit lines. If you could elaborate on the other offerings.
So one thing that we have learned, Shruti, is that we don't believe that one-size-fits-all approach works in business financing. There are various kinds of businesses. They have various kinds of use cases across inventory, marketing, payroll, GTM, and all of that. And each of these products are geared towards serving a unique use case. As an example, revenue-based financing, it's well suited for businesses which see heavy fluctuations in their cash flows. If you think about an e-commerce business, they have peak season during the festive times. At the same time, they see a downfall after that, right? We believe that revenue-based financing is a great way to fund them. But SaaS businesses, which are more stable cash flows, we can fund them via a fixed EMI product also. In the same vein, when we're talking about overdraft, they are well suited for recurring use cases like inventory, marketing spends, etc., which are like monthly use cases of the businesses. We believe that an overdraft product is a good use case for that.
All right. Abhirup, your client portfolio has crossed 2,000 lifetime investments with 500 exclusive grants funded in 2023. This year, you plan to double your e-commerce disbursements to 800 crores and allocate an additional 500 crore to new sectors, including B2B SaaS. Tell us, what are the other sectors you're eyeing?
So e-commerce and B2B SaaS will definitely be a big part of focus. Additionally, we are also making a big foray in the restaurants and cloud kitchen space, Shruti. So because of the growth of platforms like Swiggy, Zomato, etc., we are seeing that even the restaurants are seeing a good chunk of their cash flows coming from these online platforms. That's a cash flow that we can understand, and we can looking for growth capital because they want to launch more restaurants. And in a similar kind of a model, we are also expanding into the big restaurant and cloud kitchen segment in India.
All right. Abhirup, many thanks for joining us on Startup Street today. We've unfortunately run out of time, but wish you the very best in all your growth plans and with this new fund.
Thanks a lot for having me over. Thank you, Shruti.
Okay, on that note, it's a wrap on this edition of Startup Street. Thank you so much for watching. It's a goodbye from Shruti and me, but stay with CNBC-TV18. More news and updates will continue on the other side.